2011 was a mixed year for home buyers and sellers. How's 2012 shaping up? Well, real estate broker and analyst Al Schneid is here this morning with a look. Good morning, Al.
Good morning.
So how did the market finish up locally last year?
We were up about 5%, or down about 5% for the whole year, but we ended with a real crescendo. We had 6 straight months of improved sales over 2010. And ended the second half about up 11%. So it was a nice ending, and it looks like the momentum is continuing right into 2012. Inventory was another great story. We took a lot of inventory off the table in the year due to reduced new to market listings coming on market, and with the good sales, so we're down. Wake and Durham County actually have the best inventory positions from a months on hand perspective in the area. Sub 300,000 is pretty good. Between 500,000 and $1 million, we've probably got, it's kind of ugly still. It's probably 12, 15 months on hand, and above $1 million, it's 2.5 years or so of demand. So lots of work to do above $500,000.
Well, there's some good news there, and this is always a slow time of year, of course, but how is this year looking so far?
Actually, I'm pretty bullish on the year. My forecast is we're going to be up about 3.5% on the full year. January got off to a nice start. We were a little over 5% up on the data I saw this morning for January. We entered the year with the best under contract inventory we've ever had, or had in the last 4 years, I should say. And so I'm pretty bullish. I think it's going to be slow but steady in that single digit 3 to 5% growth rate. So kind of looking forward to this year. If we do what I say we're going to do, we'll be the first time in 6 years we saw growth.
I like your predictions, and that sounds good. Steady is good. Now, you also, getting back to those price ranges that are having some difficulties, you did a survey to look at which price ranges were having the most trouble. What did you find?
Yeah, there's so much talk and discussion about distressed sales, and there's a little confusion about the impact they have on house values, and so I did a lot of work on that. From a pricing perspective, the segments that are having the most trouble are the sub $100,000 price segment and the $100,000 and $200,000 segment. Between the two of them, they represent about 60% of all distressed sales last year, which was about 3,000 homes in total. With the low end, the sub 100,000 is 45% of each of the transactions done last year were distressed sales. So it's a tough story there, and your heart goes out to the people in those price ranges. When you get above 200,000, it's single digit percent growth rates, and so it's not nearly as bad. Overall, for the year, we ended up with about 15% of our sales being distressed, up from about 10% last year, but it appears that it's kind of stabilized at about 15%, so let's hope that's the case, and if it is, it'll stop wrecking the numbers of average prices because of the distressed sell about 40% less than non-distressed sales, so that'll stop some of the discussion about how our market prices are falling when in fact they're really not. It's just the growth of the distressed sales.
All right, thank you, Al Schneid, for coming in and talking with us. We do hope that we have a good year in home sales.
Thank you. You're welcome.